Good morning, traders from whichever side of the country, world you're watching me from. Welcome to today's morning market call. My name is Ian Joseph, market analyst at HFM. Special shout out to one guy. Thank you for being the first one to join the stream. A quick disclaimer before we do begin. The information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, but don't worry, I'm here to help you look at the markets the right way. Now, looking at our tab here currently at the moment, we do have the volume leaders promotion currently ongoing. We do have an opportunity as traders to turn your trading volume into cash rewards. The promotion did begin on 2nd of January. It is going to end on 20th of February. This is going to be round one. The entire of 2026, we are going to be having several rounds of promotions where we have an opportunity up to $1,000 being credited per winner. We are going to have unlimited winners. It's not going to matter how many people are going to get enrolled in the challenge. Now, for this one, for every 100 lots you trade, you win $100 cash back. Hit all your milestones. Take home the $1,000 in total rewards. How do you join? You go over to the HF, log in into the platform, navigate to the promotions. Under the promotion segment, we do have the volume leaders and join the promotions. Terms and conditions do apply. Quite interesting. Not only that, we do have several more promotions currently ongoing for us at the moment. If you have an opportunity, kindly go to the website. Under the bonuses and promotion segment, we do have several of which we are going to go through them as time moves on. Now, looking at the economic calendar, this is where we usually start our day and generate ideas from. Looking at Asian session, what happened in the morning? We did have labor cash earnings coming out for the Japanese yen, where the data did come out slightly negative, below forecast of 2.3%. And this is a data that looks at average income. Usually a high reading is seen as bullish for the Japanese yen, whereas a low reading is seen as bearish. Now, the data did come out lesser at 0.5, and you're going to look at a chart of Japanese yen. What does this mean for me as a trader? Now, at exactly 3:30 a.m. in the morning, we did have data coming out for the Australian region, and this is trade balance for the month on month up to November. We did see the number tick to the downside, and looking at the official document that was released at that particular moment in time, the seasonally adjusted goods and balance data did decrease by 1.4 billion in November. Now, goods credit did decrease by 1.3 billion Australian dollars, which is more than 2.9%, driven by metal, ores, and minerals. Now, good debits, which are imports, did increase by 63 million Australian dollars, almost 0.2% to the upside, driven by processed industrial supplies. Now, looking at the information, yes, it is negative in the sense that the Australian economy indeed is importing more than it is exporting, which is seen as negative for the particular currency. It's going to be a relatively quiet day. The next major news release we are going to have is inflationary numbers coming out for the Swiss franc, where the previous number was 0.0, meaning there isn't any inflation in the Swiss area. We are looking at inflation ticking to the upper side at 0.1%. The actual number has not yet been released, and it is going to come out in the next 25 minutes and counting. I will want to take a look at that, and we shall look at a chart of US dollar against the Swiss franc. What does this mean for the charts currently at the moment? It's going to be relatively quiet during the entire of New York session, but the highlight of the week is going to be tomorrow, where we do anticipate non-farm payroll. As we traders know, this is one of the most volatile news releases to be given out, especially as a result of its earliness, which being released on the first Friday of every month does generate and create momentum of how the monthly candle is going to print out. Now, looking at the statistics currently at the moment, we do have the previous number standing at 64,000 jobs that were created. We are looking at a forecast of 60,000, and if you can compare with yesterday's morning market call, we can see that the statistics are really moving to the upper side, meaning there is a probability we might anticipate better numbers in terms of unemployment and This could be seen as bullish for the United States dollar in terms of the NFP. The actual number has not yet been released, and we will want to pay attention to that as time moves on. Which brings me to the Shield 500 account. This January, you have an opportunity with HFM to open the Shield 500 account, and
Introducing the HFM Shield 500 account, a revolutionary new account specifically for new traders. Within your first 25 days, trade with a peace of mind knowing up to $500 in losses are fully covered as tradable funds. It is your chance to learn, practice, and grow with confidence. Ready to kickstart your trading journey? Sign up today and deposit within the first 10 days to get full access to this exclusive offer. Click below to get started, only with HFM.
only with HFM. Indeed, you have an opportunity to open the Shield 500 account. Whatever money you do, deposit within the first 10 days of opening the account. If you're doing car losses within the first 25 days of trading, we are going to back you up to $500 in tradable bonuses. Terms and conditions do apply. Kindly go over, check it out on the website. I will want to switch to my charts here. This is where we generate money from. And I would want to start with the precious metal gold XAU USD. We have been seeing quite an interesting amount of activity and what could potentially happen in the next few sessions from where we are at the moment. Now, looking at price action, we did open January with a very high note with everything that happened with Venezuela, with the president being captured along his wife, and we did see geopolitical tensions, and it is all about energy currently at the moment. Gold prices did move to the upper side, but considering it is January, investors are still taking profits. Looking at what happened towards the end of the year, this was 29th of December, where gold prices did aggressively lose its value. In less than 17 hours of trading, gold lost more than 4.7% of its total value. That's equivalent to 2,000 pips in 17 hours. But when the year did begin, in 2026, we saw gold move aggressively to the upside, especially Monday, that we did see after Maduro was captured. Gold prices from the closing price of Friday to the high that was formed on Tuesday, prices of gold moved more than 3.86% to the upside. But currently, at the moment, we are seeing prices retrace to the downside. And this is an important piece of price action, considering we had a high that was broken. Prices did break out to the upper side. I would anticipate prices coming back down, testing the $4,400 an ounce region, which is a psychological level. Not only that, it does align with the Fibonacci. If I pull a Fibonacci from that low to that specific high, the 4,400 is on the golden retracement region. I would anticipate prices coming back down into this region. If we do get signs of support forming and buyers coming into the markets, I will consider looking at net long opportunities on gold against the dollar. Looking at silver, silver is not left behind, and this could be the year that metals do really take the mantle. And we did see silver prices move more than 9%, 13% to be exact, in 47 trading hours. This was Friday's closing prices to the high that was formed on Tuesday. Silver did gain quite aggressively, more than 14% of its value, but ever since Asian session yesterday, we have been seeing prices correct aggressively, where silver prices has given back more than 8.51% of its total value. Currently, at the moment, it is retesting on the 200 period moving average, and we are seeing signs of buyers coming into the market. If the bullish momentum does continue, I will consider looking at more net long opportunities on the silver metal, potentially taking out the highs that was formed late during New York session. This was back on Tuesday. Now, looking at the information, why is metals losing value? It has to do with the dollar index. Currently, at the moment, if we look at the USD index, we are seeing the dollar index gaining strength against this is a basket of six currencies against the dollar, and we are looking at prices really being bullish. We did gap to the upper side. This was on Monday. when the markets opened just after digesting the data of what was happening in Venezuela. Now, during the day, we did see sellers coming into the markets aggressively. Prices did tank down, tapping into the 200 period moving average. But currently, we are seeing buyers take control over the markets. And this is why we are seeing gold move to the downside. This is why we are seeing silver also move to the downside. If we do break this region of resistance that was formed during Monday, this was New York Monday, and this was also Asian session on Monday. I will consider looking at more net long opportunities on price action further to the upper side, potentially taking out the highs at 98.71, which is a psychological level. If we go back in time, the last time prices was here was the start of December, which could be a potential price magnet for prices to head to if the data does come out positive for NFP coming out tomorrow. I will want to look at Asian session and New York session. This is going to be USD JPY, where we have been seeing prices consolidate for quite some time. We don't have clear direction on the markets, and this is what we do anticipate. This is normal price action that the charts and the markets usually make when they're waiting for major news release. In this particular case, once again, it's going to be non-farm payroll. Currently, at the moment, as we are waiting for the data to be released, that the markets could enter into a period of ranging markets where prices are neither making clear higher highs, prices are neither making clear lower lows. But as the data will be released, we'll want to look at employment. What could potentially be happening? Could we see the United States creating more employment? We have been looking at the forecast. The forecast has been increasing over the past few days, which is a good sign that indeed the numbers tomorrow might come out positive. But up until that moment in time, no one knows how the data is going to come out, and the markets usually take a breather as it waits for the next new piece of information in the markets. I would want to look at USD against the Chinese yuan. Once again, we did see the dollar gaining strength ever since January did open, but towards Asian session today, we did see signs of sellers coming into the markets. Prices almost crossed over, but currently at the moment, we are seeing the 200 period moving average still be above price, and the 50 is in between price action and the 200 period moving average, signaling that yes, indeed, the trend is strong, and the Chinese yuan is still gaining strength against the United States dollar. Currently, at the moment, as it stands, I would want to look at this region of interest. This was the lows that was formed on 6th of January. This was back on Tuesday, where prices did form a low, closed almost exactly to the opening price of that particular day, and prices did move aggressively to the upper side yesterday, but we are seeing signs of sellers in the markets currently at the moment, signaling that yes, indeed, the markets are in a period of indecision, as once again we are waiting on the data to be released. I would want to jump ships to indices, especially the US 500, the S&P 500. Now, we did see the S&P 500 make all-time highs. This was yesterday, where it did tap almost to the 7,000 region. Not quite yet, but we are around the 6968 region on the S&P 500, but we did see aggressive selling as institutions did take profits on their positions currently at the moment as it stands. The S&P 500 has lost more than 1% in the last 13 hours of trading. We'll want to look at new information. The markets did react positively to what happened in Venezuela, as the United States did ascertain dominance in putting its interest first ahead of everything else, where we are looking at a Chevron company potentially having a big deal of up to $2 billion going and taking crude oil essentially from Venezuela into the United States markets. Now, looking at the Dow Jones, wasn't left behind. We did see some very big impulses, buyers in control over the markets. But yesterday, after London session, towards the end of London session, New York session, we did see the S&P 500 lose quite aggressively, more than 1.42% of its total value in less than 17 hours of trading as a result of, once again, the profit taking. We are looking at the markets potentially waiting for NFP data. Currently, at the moment, we are looking at this region of support. If we do break and close well below that region and prices ticks well below the 200 period moving average, I will consider looking at selling opportunities on the Dow Jones Industrial Average. But on the other hand, if you do see signs of buyers and this region of support forming and holding around the 48,890 region, I will consider looking at more net long opportunities, potentially for prices coming back down to the highs that was formed yesterday. And this is the all-time highs, ladies and gentlemen, once again. Looking at the Nasdaq hasn't had much of an impact compared to what the S&P 500 and the Dow Jones has been doing. Now, currently at the moment, 2026 is going to be a really big year for these tech heavy companies. When you look at the likes of Nvidia are going to, they have a whole lineup of new chips that they are going to release. AMD also is not going to be left behind, where they are going to roll out some of the highest tech chips that the world has ever seen, and this could potentially move the prices of the Nasdaq even higher if the markets digest the information as positive, of which currently at the moment you okay, so I am again wants me to look at US 30 and Nasdaq too. I do believe we have looked at that, and we are looking at the Nasdaq. Now, currently at the moment, going back to tech in the United States, we were looking at a potential of more than 5 to 9 trillion being added to the AI infrastructure in the next 5 years. That's a lot of money, considering this money is going to build data centers. If you are a gamer, you have noticed that the RAM prices currently, especially for the DDR5s, have almost doubled in price in the last 3 months. Why? Because these companies now demand a lot of GPU and RAM architecture to build their data centers. Now, we did see Elon Musk build one of the biggest data centers in less than 27 days, something that even Jensen Huang did mention was quite a big feat, something that took them more than 5 years. Elon Musk did do it in less than a month. And this just goes on to show that, yes, indeed, AI is the next big thing. AI is here to stay. AI is here to make us better in the near future. And we will see prices of the Nasdaq reflect the positivity that the markets are digesting currently at the moment. I will consider looking at more net long opportunities if you do get signs of buyers into the markets come New York session. But remember, today is going to be a relatively quiet day, in the sense that the markets could be waiting for the information to come out tomorrow in relation to the NFP numbers, in relation to the employment numbers. Now, later on this month, we are going to have the FOMC meeting. We would also want to listen to the central bank, the Fed Reserve, essentially. What are they planning in the near future? Considering that Federal Chair Jerome Powell's contract is due to run out this year, what does it mean? I would want to look at cable GBP GBP, nothing major happening currently at the moment. No clear direction of the markets. The markets are not making clear higher highs. The markets are neither making clear lower lows. And this is quite expected when the markets are waiting for major news releases. Considering it is the start of 2026, institutions are still covering their positions. We are waiting on the information that will be released as time moves on, and we will make informed decision. But currently at the moment, if I can identify this region of support forming around 1.34100, which is a psychological level, and these highs that we do have residing above 1.35600, whatever the prices does happen, if we do break to the downside, a clear breakout and a closure below this region, I will consider looking at more selling opportunities if at all the data does come out positive tomorrow for the United States dollar. But on the other hand, if you do break the highs and the data does come out negative tomorrow for the United States dollar, I will consider looking at more net long opportunities on price action. I would want to finalize by looking at Euro USD. Euro USD, similar price action. Nothing is happening currently at the moment. We have been in arranging markets, prices neither making clear higher highs, prices neither making clear lower lows. And currently at the moment, if we do break the lows residing below 1.16550, I will consider looking at more shorting opportunities to the downside. Looking at the Swiss franc, which is going to be the highlight in the next few, we are anticipating inflationary numbers in the next 9 minutes and counting for the Swiss region, where we do anticipate inflation to tick to the upper side as per the forecast. If the data does come out positive, meaning inflation picking to the upper side, I will consider looking at more net short opportunities on USD against the Swiss franc, potentially prices coming back, testing onto the 50 period moving average could be a decent range. But on the other hand, if the data does come out negative in the next 9 minutes and counting, 8 minutes and counting to be exact, I would consider looking at more net long opportunities if prices does close well above this region of resistance that was formed during Asian session around 0.79795. That's going to be it for me for the morning market call. I would want to leave you with the final piece of information, not the final, but the score and draw challenge is still ongoing. You have an opportunity to take home a brand new BMW 4 Series. Not only that, a UK Premier League trip 4-2. Four winners are going to be gifted 55-inch TVs. 20 winners official football jerseys for the EPL of their own choice, and 60 traders are going to be credited $200 each into the account. That's going to be it for me. I would want to leave you with this rollout. Cheers. Stay safe. Take care of yourselves. Once again, my name is Ian Joseph, market analyst at HFM.